A lot of people think about stocks only like a number on the screen. Have you ever given it a deeper thought that there could be a business behind that number? The truth is, there is a business behind every share price. And today we're going to talk about the difference between the mindset of a trader and an investor. Now, what is the share price? Share price is simply the price that the people are willing to pay for that share at that moment. Now, there are two ways of looking at the share price. One is from the viewpoint of taking the next trade bet, or the other one is to compare the share price, the current share price, to its intrinsic value. And that's exactly what separates a trader from an investor. Now, Nifty went down by 210 points today, minus 0.8%. Some years ago, this would have me worried about what's going to happen to my investments. Now, frankly, I don't care much. Obviously, I keep the charts open, but I don't look at it and change my thinking based on the chart patterns on a daily basis. Trump is going to come up with his latest announcements on the tariffs. The weekend is coming up. Anything could happen. So there's so many things to worry about if you start looking at it on a day-to-day basis. So it's time we change the mindset. I've stopped treating stocks like lottery tickets. Earlier, I would have purchased shares and hoped that it goes up, is to start sweating when it is to go against me, because that would mean booking a loss. Now, I don't worry about it. Obviously, I do desire that the trades or the investments that I take go up and in my favor. But now the hope is backed by confidence. And where does that confidence come from? From analysis. One, you just said that not to think like a trader and think like an investor. Now, trading is a completely different topic. We will cover that topic in the future. Stay glued to the channel. Right now, we're talking about value investing. I know you guys are going to be interested about trading as well. We will cover those topics. I'm not an expert. I'm learning myself, investing as well as trading. But trading is for a later date. Right now, let's stick to value investing. The amount of information, the amount of books, the amount of references that the leaders of the industry are constantly asking you to read, it becomes kind of overwhelming. Frankly, if you just filter out the noise, keep the information and the knowledge that you must, investing shouldn't be that difficult, because if you were to own a business, you would be thinking from a business point of view. That is exactly how you should be thinking even when you are owning a stock. When you own a share, you own a tiny piece of the company. The only reason we keep glued to the charts is because there is a chart for our investments. Because the numbers are moving around from second to second basis, you feel excited, you feel like you have to participate. But the truth is, you don't have to participate on a daily basis. I know this might sound boring. You shouldn't buy before thinking any business. What's the rush? The market's not going anywhere. Learn a little bit, learn the basics, and then get started. Just imagine if there were no charts for the share prices. You just had to make investments based on the company's performance, its profitability, and all of that. Would you really have to look at the charts on a daily basis? I don't think so. I always tell people, when you buy a piece of land, do you constantly call the broker and ask him what the price of the land is today? After another hour, would you again call him up and again ask him, okay, has it increased or has it decreased? The broker will laugh. That is exactly the ethos that I want you guys to tune into. You are the owner of the company once you buy a share. You're entitled to its profits, dividends, growth, and everything. Would you buy a factory without knowing what it does? Who owns it? Whether it's making money? But people do that with stocks every day. Buy, sell, buy, sell, buy, sell. And guess what? Because of that, ultimately it's the broker who's having the last laugh. So the next time you're buying a share, start with asking these 4 questions. What do they sell? Are they profitable? Do they have any debt? And will this company still be relevant 10 years from now? Now, I am a biker. I have a KTM Duke 390. I didn't buy the Duke 390 only because of its looks. I thought about whether I could maintain it, whether I could ride it long distances, and whether I would still like the bike 3 years from now. Everything got checked, and that is why I ended up buying the bike. So if you can make these calculated decisions before buying a product, then you should be able to do the same for the share as well. The ownership mindset. That's what investing teaches us. Even when I buy furniture or a protein shake or maybe spend on a movie, I think about what's the actual value I'm getting in return. Warren Buffett says that his favorite holding period is forever, while his partner Charlie Munger used to say the big money is made not in the buying or selling, but in the waiting. That's business owner mindset. By the way, I am building this web app that's going to help me calculate intrinsic values of companies, so that I'm not guessing the value of the company, but I have a fair estimate of what the value could be based on mathematical assumptions. Assumptions are relative and subjective. So the output of the calculator is only as good as the input based on future projections, profit growth, etc. I'll tell you more in detail about this app once it is nearing completion. But for now, I'm building an app that's going to help us calculate intrinsic values of companies. This app will work purely based on assumptions, based on my assumptions about future growth, profitability, etc. Once I enter, even if the share price goes down by 20%, I won't panic because I will have some idea of what the actual value of the company is. That's going to help me stay connected with the share even if it goes against me. That's the whole idea of intrinsic value. When you know what the hidden value of the company is while the price is saying something else. So my holding period is at least 3 to 5 years. And for that, I need to have conviction. Intrinsic value is that one tool that will give you that conviction or at least the courage to hold on to a share even if it is going against you. I'm not going to sell my shares unless I need money, unless the company loses direction or it becomes way overvalued. Back to the example of owning a piece of land. Before you buy a piece of land, you need to do your due diligence, right? You do end up checking whether the area is good, whether all the documents are in place, whether the seller is to be trusted. There are so many angles that you will consider before buying a piece of land. Then why not the same for a stock? I used to think investing means buying a share at a low price and selling at a higher price. If I make 30 or 40%, I'm happy. Square off, book your returns, and show up, buy low, sell high. That's what we've been taught, right? But here's the problem. It makes you obsessed with price. And that makes you keep looking at the chart over and over and over again. The price chart is a visual representation of the human psychology and trade action. If you make your investments on the basis of price charts, then the market is easily going to weaken your conviction, make you confused, make you hesitant, and make you greedy if you feel that the share price has already started going up. And by the time you put in money in that particular share, the rally is over, the share price has gone up 15-20%. You feel that if it has gone up 15-20%, it could go higher up. But by then, the volume has dried up, the rally is over, and the moment you enter, the share price comes down. Right? So guys, it's best to not look at the chart patterns while making your investments. The only place where the price matters is when you have to compare the current price to its intrinsic value. Now, I'm not going to take any names of any shares. There was a company that got launched with an IPO last year, got absolutely crushed after the IPO launch. It came down almost 70-75%, but ever since it has rallied more than 150%. Now, why did that happen? Because the moment it became public, it came down to its fair value, and when it came to a price where the valuation was justified. Apart from that, there were some corporate actions like buybacks and changes in business strategies. After that, it has rallied more than 150% in less than 1 year's time. If you guys know what share I'm talking about, let me know in the comments. The whole idea is to try to understand the business behind the number and not just the number. It's important to try to understand the business as deeply as you can before making any investment decisions. And this, my friends, has nothing to do with the share price. Because if you make your investments only on the basis of share price, you're either going to panic sell when it goes against you, or you're going to enter at the wrong time because of FOMO. So if there's only one thing that you can take from this video, just remember the stock is not a number, it is a business. And the longer you think like this, the calmer, the clearer, and the wealthier you will become. So let the traders chase the daily green and red candles while we build something long term. If you found value in this video, please hit the like button and share it with your friends who might be interested in the world of finance. And I'll see you in the next video with another finance topic.